Hey everyone, please like and subscribe to my channel so that I can bring you more content and you'll be notified when it comes out. I'd like to look at something called Ammo Inc. POW is the ticker symbol POWW. And this is something that I put in the too hard pile or look at later pile. And this isn't a recommendation to buy or sell. It's just going through the process and just showing you how things you'd look at when you're looking at a stock. So there are thousands of listed stocks, and even if you're a full-time investor, it would be impossible for you to do a deep dive on all of these. So you would probably need some sort of filtering system, either by looking at 13Fs of other investors and what they're buying, or some other way to come up with names. And once you do that, most of the stocks, 99%, you're going to have to do a pass on quickly. And then the few that look promising, you want to do a deeper dive. And this is one that I started to look at and things look good. And then I put it in the maybe later pile. And I'll just go through some of the things I saw with that. So let me share my screen here for a second. So Value Line is a great resource, and you can subscribe to it, or you can get it free online, probably through your library. I looked it up on Value Line, and it turns out it's not listed. So Value Line has a lot of stocks, but not this one. And we'll go take a look at this. So it hasn't been around very long. It's went public in 2017, and got as high as $9. There's a video somebody about a year ago, it was at 450, and he was saying buy all you could. And if you had listened to that guy, you would have lost like 60% of your money. So I'm not throwing that guy under the bus. I'm just saying that you have to look at things objectively and with a longer term lens. So in 2020 and 2021, there were lots of shortages of things, and there was civil unrest, and people had stimulus checks. And so for that reason, people were buying a lot of guns. And you saw this reflected in Smith & Wesson and Ruger's sales numbers. And if you had saw the amount of money they were making during that time, you wouldn't say, I just am going to assume it's going to keep going up from there. You have to realize that that's probably temporary. And if you're going to make assumptions, you should start it from a normalized basis. Same thing if you looked at a company like Madison Square Garden, or another company that is involved in live events. When everyone was in lockdown, obviously those numbers went down a lot. And if you want to predict future income, you wouldn't start from that point. You would look at, well, how much they normally make, how much had it been growing before that, and then take your clue from that. So a little about the history of the company. The guy who started it actually knows what he's doing about starting a business. His name was Fred Wagenhals, and he used to be involved in a company that did licensing rights for NASCAR race car drivers. And he grew that within like 5 years from nothing to a company that he listed publicly and eventually sold to the family that owns NASCAR for $475 million, I believe. So, from nothing to a $475 million exit in less than 10 years, that's pretty incredible. He had never been involved in guns before, and through his friends who were race car drivers, some of them took him hunting, and he got into guns. But he noticed, as you probably do if you go to your local gun store, it seems like a very quaint, antiquated industry. And he thought somebody who is business savvy and can bring things like technology into it can disrupt this industry. And he founded Ammo Inc., took it public. At some point, I think they had like 200 and something million in sales, and making mostly ammunition. Now, they're not the largest ammunition maker. There's a company called Olin, which makes several things, but they also produce ammunition under, I believe, the Winchester brand. And there are other companies like, I believe, Vista Outdoor also makes ammunition. And they're much bigger players than Ammo Inc. Ammo had been producing a lot of commoditized ammunition, and under this person's leadership, he wanted to get into more higher margin things. So they licensed a technology which does tracer bullets. So if you've been in the military, when you're shooting at things at night, some of the bullets that are glow in the dark, let's say, those are called tracer bullets. So they licensed this technology from the University of Louisiana, which is a special kind of tracer bullet that if it hits something, it won't catch on fire. So it doesn't rely on phosphorus. It's glows in the dark, but it's not hot. So apparently that has some advantages, and people like that, either in the military or otherwise, and they're hoping that they can monetize that. They previously had been focused on more commoditized ammunition, and during the supply shortages of last year and inflation, they got hit pretty bad. So a couple of conference calls ago, they lowered their EBITDA estimate from, I forget what it was before, to 80 to 82 million and of EBITDA. And then this past conference call, they lowered it even further to 17 million of EBITDA. So 245 million objectively for what I'm about to describe the company has doesn't seem like a lot, but they have some problems. They've, as I said, like the EBITDA estimates keep going lower and lower, and the reason for that is twofold. One, they're moving production to a new manufacturing facility in Manitowoc, Wisconsin, which is 165,000 square feet. And previously they had been had the capability to make about 1 million rounds a year. And they think with this new facility, state of the art, and with equipment that can be changed on the fly to meet demand, that they can make 3 times as much ammo. And because of inflation, bullets had been selling at about 30 cents a round, and now they're 60 or 70 cents a round. And I won't say they benefited from that, quite the opposite, because of the inputs went up a lot. So things like brass, and they had trouble getting primer from their European suppliers. So, they get the brass, they get the primer, they get the bullet, they put it all together, and then they sell it. And a few levers that they want to pull on the ammunition side is, they want to move away from this more commoditized, lower caliber ammunition to higher quality ammunition that they can get more money for, like these tracer rounds, like these higher caliber rifle rounds. And they think that in an era where they experience some disruption, or the price of brass gets higher, instead of selling this low commoditized product, they can make the shells for other producers and have them supply the primer and the bullet. But they can use their stamping machines to make different kinds of high quality bullets that they can sell for higher margin. So that's what they are planning on the ammo side. There's another part of this company, and this is probably the more interesting part. They a couple of years ago bought a company called gunbroker.com, which is the largest online broker of guns, and it's sort of like eBay for guns. And they paid 250 million for it. And if you look at the price now, the market cap of this entire company is 245 million. And that's less than what they paid for gunbroker.com, which is growing, and you've got the ammo stuff thrown in for free. So this doesn't look like a terrible price, but as I said, earnings are coming way down because they're experiencing some problems with the supply chain, with inflation, and things like that. And coming off the spike in 2020 and 21, when everyone was in lockdown, getting stimulus checks, and they were watching civil disruptions and riots on TV, and everyone buying more guns and ammo. So why is the gunbroker.com thing important? One, when they paid for it, as I said, it's 250 million of the price. So, if you're thinking about price to book, it's trading at less than that. But more importantly, the gunbroker .com business is growing about 20% year over year, and it's the largest online marketplace. And if you want to be in an industry, commoditized or not, if you're the largest player, you generally have a really big advantage in terms of pricing power and everything like that. So Gunbroker has an advantage that the ammo side doesn't. As I said, in the ammunition business, they're not the biggest player. Companies like Olin and Vista and a couple other ones are bigger than them. But with regard to this online thing, they have a definite advantage because only FFL, Federal Firearms Licensed dealers, can sell on it. And if it's the biggest one, if you think of it like eBay, when eBay raised the prices, a lot of the sellers complained, but they stayed on there because you don't want to go to a place that's like eBay but cheaper because the customers aren't there. So whenever you have one of these two-sided markets, they're difficult to establish, but once they're there, there's sort of a network effect, and everybody goes there because everybody goes there. And that's sort of what you have with gunbroker.com. If it's the largest, if somebody offers something less fees, then they probably won't get as much traction because if the buyers go there, there's no sellers. Sellers won't go there because there's no buyers. But in a two-sided market, it sort of becomes this self-reinforcing loop. And with another thing to think about here, hold on one second, is, so as I said, they paid $250 million for gunbroker.com, and then you add that to the ammunition business, and you'll see that it's trading for less than book, about 60% of book. And if you look at the number of shares outstanding, 117 million. When I looked at the 10K, they actually have warrants out, and that, it's a potential dilution. They have 2.8 million stock warrants with the exercise price of 240, and another 2 million in stock options for employees. So that's about 5% dilution coming down the pike. Good things about the company, as I said, 7.5 million users on gunbroker.com, and it's growing. And with the ammunition business, they've got some headwinds that they've faced because of inflation and things like that, and supply issues. But if they can get that straightened out and they move to what they're planning with higher margin ammunition and higher margin making shells for other manufacturers, there's no guarantee that that'll work out, but if it does, that's a lot more money coming in. And one of the things that's interesting about this is they were trying to split the company up, which is very strange because you just had spent a lot of money to acquire this other company, but the CEO decided it would be a good idea to split the company up, and this ended up causing this rift. And Irvin, who URVAN, who was a 10% owner of the company and was the founder of gunbroker.com, was opposed to it. And this guy, Fred Wagenhals, who was the CEO, was in favor of it. And there was some Game of Thrones stuff going on behind the scenes. And one of the employees high up in the company was fired because they were accused of providing the board owner with some proprietary info so that he can wage this proxy fight against this plan. And it ended up in a lawsuit, which was settled. And the resolution of that was that Irvin, who had planned to get rid of the entire board and put in a whole new slate of directors, didn't get what he wanted, but they did allow the people that he nominated to run for the board. And there was a plan put in place where the CEO would eventually be replaced, and they would hire an outside firm to do a CEO search and replace him. So that's where that is. But if there is a spinoff, I think, this is an interesting thing to look at. And, as I said, put this in the watch pile for now, but we'll go over why a spinoff would be very interesting. So as I said, this is trading for less than what they paid for gunbroker.com. And, they got 27 million in cash. They got 40 million in inventory, and they thought they could do about 300 million in 2023 in revenue. And that obviously is running into some problems because of supply issues, because of inflation, because of a downturn in the economy. But if they can pull a few levers on the ammunition side, that's potentially profitable. And if they can spin off gunbroker.com, I think that's a really interesting play. And when a company gets spun off, this is one of the things that super investor Joel Greenblatt identified in his book. You can be a stock market genius as a potential source of great deals, because there's often forced selling, or somebody that wanted one company and then they get this other company. They sort of sell it. But a few levers that we talked about on the ammunition side, we'll talk about what can happen on the gunbroker side. So gunbroker.com, as I said, it's the largest online seller of guns in the US. They had 6% market share currently, and they keep growing the number of users every year. Currently, they have 7 million users, I believe, but and that number is going up. I can't remember where I put that in my notes. But at like eBay, you bid on one item and then you win that item, and then you pay the dealer directly, and then that dealer sends it to an FFL dealer where you live, and then you pay a transfer fee, and that person does the paperwork and submits it to the FBI and does the background check. And there's a lot of moving parts there, but it still comes out cheaper normally than going to a local gun store and just paying whatever price they have, because you have a lot of buyers all competing. And one of the levers that they want to pull is they're changing the website to be able to have a cart. So just like when you buy things on Amazon, you can add several things to the cart and pay for it once. Gunbroker.com doesn't have that. You, as I said, bid on something, and if the dealer accepts it, you pay that dealer directly, not through gunbroker.com. You pay them directly, and then gunbroker.com arranges for the gun to be shipped to a firearm dealer near you, and you pay a transfer fee. And so the ability to add a cart where you would have several items, you buy this gun, and then through gunbroker.com or somebody else, you can buy ammunition, which ammo makes, or buy a holster, or buy a suppressor, or buy a laser sight, or buy other things like that, and just add them all to your cart and pay once. That removes a lot of friction from the transaction. So if you wanted to buy all those things, instead of making 8 separate transactions and 8 separate payments, you just do it once. That removes a lot of friction, which should increase the amount that you can sell on this, because then your average sale per customer will go up because you've removed the friction, and you can sell more items. You can sell items that you produce, because as I said, currently Ammo Inc. is not the largest producer of ammo, but if you're selling things through Gunbroker, you can boost the visibility of your products versus your competitors' products, which is something that Amazon does, or you can charge competitors to have their item be seen better, which is something else that Amazon does. And so the addition of the cart is a great lever to pull. And if this is separated, you've got this two-sided market, which is very difficult to develop. And in terms of competition, the reason I think this is a really interesting play is Amazon does not sell firearms, and the other online marketplaces like Facebook Marketplace, Craigslist, eBay, none of them allow you to sell firearms on there. So there's not some 800-pound gorilla that's going to come in and disrupt you. You've got this little niche space that not only are the 800-pound gorillas not going to come in, they don't want that. You've already established this two-sided market, which makes it a very interesting play. But again, there's some hair there. The EBITDA went from whatever they had guided to before to 80 million 2 quarters ago, and last quarter they guided EBITDA to 17 million. And there's a turnaround plan in place with the new facilities and breaking this up into 2 separate companies and adding the cart to the gunbroker.com, but there's no guarantee that any of that will work. So for now, I'll put this in the too hard pile. Peter Lynch famously said, the problem with turnarounds is that they usually don't turn around. So the best time to buy a turnaround is after it's turned around. So even though $2 a share, which, it's a 233 million market cap, which is less than they paid for gunbroker.com, even though that seems like a good price, I would rather pay more for this when the turnaround is working than to buy this cheap and hope that something works out. So this is why I put this in the too hard pile. And again, if you disagree and you want to buy it yourself, that's on you. If you agree and don't want to buy it, do your own research. Don't listen to me, but I'm just going through my process. And I like easy wins. I like sure things, and turnarounds aren't usually a sure thing. And I would rather pay more after a turnaround happens and it's working than take a chance. If you buy here and you got it in cheap and then the turnaround ended up being a home run, great for you. And if you got in here hoping for a turnaround and it didn't go your way, then that's really tough. So you have to make that call yourself based on your own level of risk. But good luck, and I'll put out a couple more videos hopefully this week on some other things that I'm invested in or interested in. And just like and subscribe so you'll see the updates. And good luck out there investing. Thanks.